Well, if you are worried about another round of tariffs hitting your portfolio, you might be better off parking some of your money at home. Apparently with Melissa Lee, who's trolling Amazon right now. Or let's go off the charts with Chris Verrone of Strategas. Chris, what do you got for us tonight?
Hey, Brian, we're going to talk about small caps, and I think this is one of those neglected areas of the market that's finally getting involved. This is a year-to-date chart of the Russell 2000. Let's just set the playing field here. We've spent basically the entire year in a well-defined range. There's a 150-point range, 1,600 on the high side, 1,450 on the low side, just starting to break out here. So finally starting to play catch up with large caps. This projects about 10% higher, about 1,750, 1,775 on the Russell 2000 chart. But if you think about the year, we had 4 corrections here. We were down 8%, down 10, down 10, down 7. So we've spent the year range bound. We have just broken out. I think it's too soon to fade this, particularly when you put it in context of the longer term picture here. We had an 80% up move off the 2016 lows. And then you know what? Last year we had a bear market in small caps. Small down 27, high to low. We ricocheted off the low. We spent most of the year in a range, just finally starting to break out. And you know, one thing we looked at with a 52-week high in the Russell 2000 this week, when you've gone more than a year without making one, and then you make a 52-week high, the forward performance over the next 12 months is universally, historically, very, very strong. There were 12 examples of this. 11 of them were positive 12 months forward. So we think we have history on our side here. I think the big question is, do small caps present a better case versus large? So what we want to look at here on that score is small relative to large. There is some indication that we're finally starting to see some basing here. So in relative terms, at worst, they're keeping up. At best, maybe some outperformance. And you know, if you think about what comprises the Russell 2000, you have to go where the weights are. It's a very concentrated index. 10% of Russell 2 are banks, another 8 is biotech, another 7 is software. These are the 3 largest groups. We like the banks here among the small ones. We think the biotechs are getting better. Own some small caps here. They've broken out.
Chris, thank you. Why don't you come on over to the desk? We'll talk more about this here. Listen, small guy, I saw you sort of gesticulating.
I was actually waving at Will. Have you met Will, our intern? Will does a fantastic job.
Will has done a great job. Will thinks he's getting home tomorrow night, flying at 10 p.m. from LaGuardia to Boston. Will, we'll see you Thanksgiving morning back here in New York.
At the Sullivan House.
At the Sullivan. You're welcome to come to New Jersey. But, I mean, are you a buyer of the small caps?
Well, no, Chris makes a great point. I mean, he says breaking out, and he's probably right. But as Dan mentioned last night on the Fast Money Show at 5 o'clock, you know, this 161.5 level in the IWM, this is precisely the same high we made back in May. So we're on the cusp of breakout. I think what's happening is the Russell, the small caps, are now catching up to the S&P 500. The all-time high made back in August of last year, around 173. Tim asked last night how much room is left, and I think the answer in the IWM is probably about 7.5%.
But Chris, do you think, is this a catch-up trade, or is it going to be a rotation that we're going to see this thing sustained and really make a run at those prior highs?
I think this is a catch-up trade in small versus. I still think this is a cycle dominated by big cap stocks. But this is the time of year when we look for neglected areas that haven't played ball all year. And I think small caps satisfy that. And when you look at what comprises it, a lot of healthcare, a lot of banks, 2 corners of the market that have started to get a little bit better. I would also note participation is actually getting broader. You have more small cap stocks above their 200-day moving average at any point in about 2 years now. So we've seen this broaden out. We've seen the leadership start to get in gear. I think it's a positive.
Let me ask you, do you feel more strongly about the relative valuation of small caps versus large caps, or the upward trend of, would have to be both?
I think the trouble with valuation here is money's still free. You know, you have 10-year yields at 175, and I think in environments where the cost of capital is basically zero, using valuation as a timing tool isn't very effective. So I'm making a chart call here. I'm making a trend call here, not a valuation call.